So CloudMD finally sold some of their medical practices, the brick and mortar ones, to Well Health. So I wanted to go through that update and see how it affects some of the financials going forward. So the press release is on the screen now. They ended up selling to Well Health. So this is a much larger Canadian digital healthcare provider than CloudMD. Was one of those companies that I wondered might acquire CloudMD someday, but it really looks like they have a very different business model. So I don't know if they'd be a very good fit for Well to ever acquire Cloud in the future. So they didn't get as much cash as I was hoping. They got a little under 6 million, or will get a little under 6 million when the deal closes and all the holdbacks are completed. So they are acquiring brick and mortar and clinics and some software, but only British Columbia was mentioned. There's a primary clinic in Richmond and one in South Surrey, okay, as well as picking up their electronic medical records. I was a little surprised by this. I shouldn't have been. Just their previous CEO really talked about the value of those electronic medical records, but the company's clearly taking a different path. They acquired so many bits and pieces, and I guess it's good that the company really has a singular focus, particularly on the enterprise now going forward. At the very bottom of the second paragraph, we got a statement of underlined in red, but it's not new. So they do not expect an EBITDA change or cash flow change based on this, on these sales. And that was right from the conference call, the MD&A from Q2. So that's not a new statement. That's something we should be expecting. So going forward, kind of as expected, there's just going to be these two main divisions with a little leftover or a little bit of clinics left. And I'm only going to model those, the electronic health solutions and the digital health solutions going forward. So as I kind of mentioned these numbers earlier, they're going to get 5.25 million. They said to close in Q4, so this is this quarter, so it's relatively soon, and they'll get the last 0.65 million at some point in the future. So where does this kind of put Cloud? My first thought was, is this all of the clinics? Is there more to sell? They had 9-ish million per quarter in revenue, so I was hoping to get more than this. I went to check CDAR to see if there was anything else posted or any MD&A or some comments about the sale, but I haven't found anything. I might have to wait to the next conference call to get some information on exactly what percentage was sold to Well on this transaction. I did go digging through the Q2 MD&A to try to refresh myself on what exactly was sold, or particularly percentage-wise. So they talked about their clinics back in August and having high-tech medical clinics in British Columbia. So I'm assuming these were all sold to Well, but then there's no mention of Ontario. So they must still have their Ontario clinics. Now, they also talked about their pharmacies in Q2 in their MD&A. So they had 2 pharmacies in the Greater Vancouver region. So that must be the 2, including South Surrey. So I assume that these are gone and these are now with Well. So I'm really just curious what's going on, what's left in Ontario. And I really can't guess, or I'm not sure at this moment, what percentage of revenue is gone from the clinic business. So that I'm, again, really curious to get a breakdown. We know the total, just not the breakdown. And are they going to keep some clinics to help service their EHS or DHS? So in Q2, this was the revenue breakdown that I made, splitting it up into the 3 divisions. So this is, these 2 are going to stay. This is the one that's going to go, or I think they talked about 95% or so of it going. So what fraction of this was sold to Well? I'm not sure how much of this revenue is going to stay going forward, or potentially if there's a little bit more cash that they could get in selling things. So that's my big question mark just from this press release. These were my comments from my previous video looking forward to Q3, and the only sort of unknown is somewhat taken care of. They will divest some clinics. Now I put the word some here, so that should have been a quote from their conference call. Again, what does some mean? So they thought that this was going to take coming weeks. I guess it was more like coming months. So they took a little longer, but not unexpected, to deal with that Q3 bullet. Nothing else has changed. We still should see similar revenue in Q3 compared to Q2 because nothing was going to close in Q3. So where does that leave us in terms of cash? They had about 30 million, plus they're going to get 3.2 back from Vision Pros, and now they're going to get 5.75 million. So let's see, in total, about 33 and another 6, so approximately, I'll round down, 38 million. A bit more than this, but not quite 39. So they have a lot of cash, and particularly at the end of this video, in a couple slides, I'll look at their enterprise value. Their cash to market cap is annoyingly close. So these are my own personal Google Sheet. So in Q4, I got rid of the clinics and pharmacies. I assume not all of this will go. So the first thing I'll be looking for when we get the results, I guess not till Q4, is what's left there in Q3. We'll still have this full clinics and pharmacy revenue. Now they are saying, they reiterated that this isn't contributing to EBITDA or cash flow. In 2023, none of my numbers are different from my previous video. The clinics and pharmacies are still gone, but I did update the market cap, which has dropped a lot as a function of the price. I just used BNN's numbers, and the price to sales has dropped to about a half. It was about 0.8 before, so it's incredibly cheap on a revenue basis. Now, it does only have about 10% growth, but it's certainly, I think, trading fairly cheaply. So that enterprise value, the market cap is 67 million. So the cost of, or the value of all the shares, they have almost 40 million in cash and working to be cash flow positive. So they're not burning through $1 million a quarter, $1 million a month. So the enterprise value is less than 30 million. That seems incredibly low. So if you bought the company for 67 million, you're getting 38 in cash. So the value of the company is only 30-ish million. So again, if that was a little quick and you're not used to enterprise value, the enterprise value plus the cash is going to add up to that market cap. Okay? Often companies have debt, so it works the other way. The enterprise value is higher than the market cap. So if you acquire all the shares, you have that company and then debt to deal with. So it's very cheap. I'm not buying any more at the market. Nobody cares. Everybody's just trying to survive, hoard cash. Nobody's trying to buy. And then I don't love their slow growth. So they're saying around 10%. I'm hoping it's going to accelerate, but that's a hope. So not really a crazy urge to buy a company right now, even though the price to sales is, again, around the 0.5. I'd sooner keep the cash. If it was growing 30-40%, I'd probably feel a little bit better. They're not in any risk in terms of running out of money, so balance sheet's great, but they're just a small cap in a horrible market. So someday people will care, but not right now. So that was my take on the release. Waiting for more, waiting for details. Is there anything else left to be sold? Hopefully we'll find that soon. If you do like this video, please consider liking and subscribing, as I hope to keep making these.